Welcome to the Monday version of the Risk Reversal Podcast. Guy Adami, Dan Nathan, special guest sticking around, Danny Moses, Vincent Daniel, Porter Collins. We're going to do a preview of the week to come. And Dan, it comes in the form of a lot of different things, some pretty interesting earnings. But apparently, we're going to get a CPI. The reasons why, I guess, they have to drop it because Social Security payments are predicated upon where inflation rates are. So talk about the week.
Doctor, can't you see I'm burning?
Go ahead.
Okay, Dan, you go.
Go ahead, Dan, you go.
You go.
Freaking love that.
Wow.
All right, let's just talk about a couple things. I'm more focused on what's going to come out as far as earnings. So late last week, we had Taiwan Semi, which is right in the center of all the great things that are going on in AI. They had already given us September sales, better than expected, right? They come out, they give their earnings, the guidance is great, everything, and the stock trades down. Okay, so from an all-time high, who gives a shit? It's up 100% in the last 6-7 months or something like that. We had the airlines last week, right? And they've given a lot of that back, Delta, United, all that sort of stuff. And I don't know if there's a good read-through as far as the consumer is concerned, but the most important name to me on the earnings front is Netflix. Not that they're recessionary proof. We get it, okay? What I'm most focused on, here's a stock that has not confirmed any of the new highs in the S&P 500 and the NASDAQ over the last few months or so. And I want to hear what they have to say about growth. They don't give subscriber numbers anymore, and how the how investors think about that, because that might be just like the banks last week set up earnings season and it looked great. The end of the week, it didn't look so great. I want to see what Netflix has to say and how investors kind of extrapolate that. It's not an AI story. I get it. But to me, I think something's got to set the stage for tech.
I don't know. We didn't rehearse that. I don't know why the three of you simultaneously broke out into songs. So maybe somebody wants to help me.
I thought that talking about CPI, which we're going to get the number,
there.
we're saying it's going to be doctored. I don't care what the number is. 0.2, 0.3, whatever it might be.
There's 0% chance that it's not doctored.
Right.
So
So
just
if we're
make
going
up
to doctor
tell me
it,
the number
You
you
guys are
want.
yelling at me like I'm in charge of this.
Just tell me the movie you want to see.
and by the way, on your Netflix thing, this Black Rabbit is good enough to buy shares on
No, but to me, my point is, I want to see an awesome number, awesome commentary, and great guide, and I want to see how the stock acts. That's my only point.
I mean, the Black Rabbit's about Vinny and his brother. It's amazing.
Basically,
That's true.
Yeah.
First off, even if the CPI is not doctored, it's not structured to tell the actual inflationary trends for the average
How do you
consumer.
feel about I mean, where do you – not that, again, I know you don't make decisions based on this, but is inflation still a problem?
I think inflation is a structural problem that is policy-driven. So think about the last few bills that came across your desk, right? Some of the big annuals, right? You got auto insurance up still 3, 4, 5%. I pay supplemental health for my mother, up 25%. Everyone's healthcare bill is coming down the pipe. It's going to be up 25, 30%. Anytime an economist tells me there's no inflation, I want to pull a Porter and punch him in the face.
Throw utility costs on top of it. All this AI stuff, we've talked about this at length. The energy component of this is I think we understand that's inflationary as hell.
Well, that's the reason why we were singing Doctor, Doctor. We just don't listen to that. Even though everyone does, I understand the markets do, and things move on it. We just don't listen to it.
My wife makes money. Every restaurant I go to, I order a cheeseburger. I went to the Capitol Grill today, $45 cheeseburger. I had to trade down to salad.
Did you pay for it?
No,
you didn't.
Jason paid for it.
Jason paid for it.
Okay.
Yeah.
Jason,
But I had to trade down to a salad. I can't go for $45 cheeseburger. It's ridiculous.
So inflation, but again, we talked about it last week. Obviously, the Fed pivoted from worried about inflation to worried about the job market. Maybe rightly so, but doesn't mean inflation's still not there.
So next week we'll be 2 weeks away from the Fed meeting, which is 100% chance they're cutting.
Agreed.
Right? So no
CME
matter
Fed
what,
Watch tool tells you it all the time.
Right. No, even if it's 0.3, even if the CPI numbers let up. So people are like, oh, but the Fed's going to cut, but the Fed's going to. The danger in this market is when it starts to trade down on 100% Fed rate cut probability, right? Then it's like, okay, now what? And I think it's really what kind of Vinny and talked about with these multi-strat funds and these levered beta neutral funds is that what are you using as your discount rate going forward? What are you going to project earnings? So we're going to get backwards looking numbers, but even no matter what they say in the future, if people just want to start to apply a different risk-adjusted return to that, that's all you're seeing. And it doesn't have to be cataclysmic.
Watch the Pavlovian response that I get with this, and this is sort of a jump ball. I'm curious to see who goes first. On Wednesday, we hear from Tesla.
Oh, bullish boy, why don't you start talking? Yeah.
I
He's
think
not a car company.
I think he's going to doctor his numbers. His numbers is probably a fraud anyway, so he just makes up whatever.
That's
numbers.
Dr. Evil. You're talking
Yeah.
about, right?
Okay, so I'll push back a little. Do people like Guy Adami? You're focused on the wrong things in terms of Tesla earnings. It's not about that. You should be looking at what they have.
I don't
have
a view into the Optimus order book, right? That the robots in 2020, 2032.
You've said it best. You said and I've said it years ago. It's taken very long time. When Tesla cracks, you'll know that this market
the
is
king meme stock.
It's the king of the meme.
Well, it has cracked, and it's massively underperformed the NASDAQ over the last 4 years. One of the worst performing mega.
The earnings have dropped.
All right, so let's just talk.
What percentage of Tesla's earnings dropped? You say it's cracked? It's
been cut in half.
Relative to its earnings projection.
No, I know, but
Yeah.
what I'm saying is something really interesting happened over the last few months, and I think the last time you guys were on the pod, we talked about it. The first time I can remember the bulls and bears agree on one thing in Tesla, that the auto business sucks, right? And so, yes, sentiment was really poor. This was a month ago when they released their September earnings, but their September deliveries. We knew that expectations were really low. We knew the tax credits were going away, and you saw a lot of demand, right? But they're still
stuffed into Turkey.
Are you D90?
No, what I'm saying.
Are you D90?
How many turkey
You find that,
superchargers
man.
they
They
have?
changed
Come
the
on.
samples.
They changed the sample.
So
No,
they
but
can have their
my point
AI.
is the stock rallied $100. Okay, so now it is about Optimus. Now it is about Robotaxi. I had the guy from ARK Invest, the futurist, Brett Winton, on the. But he
You're
told
a good
me,
man, by the way.
I know.
Yeah,
He's a smart guy. He told me a year from now you are not going to be able, as a consumer, to buy a Model 3 or Model Y because they're all going to be going into Robotaxi. And I said, come on, man. And so my point is that
You bet him? I would have bet a lot of money on.
There's 4 years into a price war. Their business is done. They're going to cannibalize the 3 and the Y. They just introduced. Can you imagine what a stripped down Model 3 looks like?
So let's just say you were bullish on AI. I don't know if you are, you're not, right?
I'm bullish on AI.
And let's say you're bullish on robo-taxis. I got a stock for you that you're going to pay what now, 25 times earnings?
You gonna tell us?
Google. You can own Google. You don't have to own Tesla. They're ahead of the game in robo-taxis. They're ahead of the game in AI. I mean, they're the ones with the data.
Is there an existential search risks associated with Google on the back of AI, which they may be behind the curve on?
I don't think, Porter, what did you say? Who's the number one or number two AI
Gemini,
engine?
number one.
Gemini was number one. So,
because of their installed base, and that's one of the reasons why OpenAI is really desperate to do some
now
distribution
the
deals.
stock has moved. I'm not saying I would buy it right here.
At all-time highs.
But like my view is, if you're going to pick a horse, we would pick Google.
And Dan, what happens if the AI bubble kind of fizzles out? They cut the cap. Someone big says, "Oh, I'm going to cut capex by 50%."
Yeah.
Is that good or bad for Google?
Well, it's a tough one, and I'll tell you why. Because they're already starting to cannibalize that Blue Link business, right? And so advertisers are going to pull back in a recessionary environment also. And so I agree with you guys, because the way that Gemini is going to be, worked across all of these platforms, I think they have 6 that have more than 2 billion, monthly actives or whatever. It's going to work in the long term. The one thing I'll just say, and I've heard this over the last couple weeks or so, when you think about all these models that are going to be commoditized, we keep hearing that, right? The next phase of this has to be enterprise adoption. Well, it doesn't have to be for Google. That's one thing I would say. And the other thing I'll just say, when you think about this search behavior, we've all become accustomed to it being free, right? So for 25 years. But what's different about Google over the last 25 years, they didn't have any competition really until Meta, right, started taking some market share in digital ads. Right now, there is nothing but competition. You know what I mean? And it's well-backed competition, and I think that's what's different. I don't think it's going to be a winner take all like the last 25 years with Google. So I think you're going to see margin pressure. If Google digital ads was the best, what do they say, the best business that's ever existed on the face of the earth, I think that changes a lot over the next 25 years.
But the advertisers haven't hit OpenAI yet.
Well, they got to figure out how to do it, right? So, for instance, if you're not going to be accustomed to getting the 10 blue links, you're going to get this contextual answer. One of the biggest things about AI going forward is going to be trust. And the more you trust it, the less likely you are to click through to an ad. So then how do they monetize you, especially when the compute costs are so much higher than they were for just a typical Google search? So to me, what I'm saying is it's not going to be a winner take all like the last 25 years, but I agree with you guys. I think now, after such low expectations for Gemini over the last few years, I think they're probably best positioned right now to monetize.
A few years ago, if you put your trust into Danny Moses's picks in the National Football League, you did extraordinarily
Well,
well.
the first year,
a few years
in
ago.
21.
That's a few years
22
ago.
was it?
He took a lot of
What do you
Dan's
mean,
money.
22? I was 7 games over 500 and won the Super Bowl.
I took $100 from you
Don't-
last
he
week.
absolutely
didn't I?
crushed it.
I
Give
tried
me a
to say
second.
you wouldn't take it. God.
You were on fire,
Yeah. Yeah.
and you were able to see things.
Yep.
But National Football League, we're at a point. There are games where there are a lot of games, and every once in a while there's a game like I have to watch this game. For example, Chiefs Lions was a game that even people like me wanted to watch because it's you just want to see what goes on. Question to you: is there a company that when they report, you're sitting back and saying, "I want to hear what they say," not because the market's going to sway on what they say, just out of curiosity? And chew on that for a second, because there are a couple of them for me. Tesla, by the way, for whatever reason, is one. Procter & Gamble, I'm always fascinated. Walmart, I like to see how they're levering AI. I mean, there's certain companies out there that, not all of them, but every once in a while there are a few that report like, I'm curious as to what they're about to say.
You go.
I'm curious to see. I mean, since we own the stock, to see what Google says about capex, and they've all been kind of taking it up.
Do you want them to ramp up capex or ratchet it down?
Well,
as a shareholder,
I don't care honestly, but I'm sure people want them to ramp up. I mean, if you're
You're an AI, but you want them to. You want
if you're
someone
short in
Google
the
to say,
AI stocks, you want them to say, I'm going to,
back.
maybe slow down the growth rate. I mean, I actually think that's a risk to the S&P if Google or one of these big guys doesn't hit the same growth rate in terms of capex.
One company reported last week, J.P. Morgan.
Right.
Like that's as
All right,
financial
so
guys.
you heard
right,
what?
right.
So you heard all the things that he said about cockroaches.
then I had another.
Then you heard what he said about his stock being expensive. We've talked about that. By the way, full disclosure, when it was a $200 stock a year or so ago, he said the same damn thing, and the stock went up 50%. So it doesn't mean he's right, but he's obviously concerned.
Well, look, we don't own the stock, right? I just like to see what he says because it sort of dictates what we're seeing in the economy. I think the most important.
He's honest.
I think the most important, and I think you guys would know better than I would. NVIDIA is one of the most important things that is going to report, and I know we have to wait for that, but still,
Hold on.
that's
They
the epicenter.
They
of,
manufactured their own sales pretty well. So
Guys,
I-
we're going to
but
get.
still.
Aren't we going to get the private equity guys? Aren't we getting Blackstone and Apollo and everybody that's going to come? That's what everybody's going to be harping on. It's going to be, oh, what are you bucketing? What are you doing? And let me tell you something else. Those college kids that all work in PE now, the ones that graduated in the last 2 years, right now their lives are living hell. Why are their lives living hell? They're now sitting and bucketing every single loan that's in. Hey, I want to know, like they're segregating it by region. They're segregating it by, covenants. They're saying, so right now that's going on because
those vest-wearing mofos.
By the way-
vest-wearing mofos.
By the way,
exactly right.
it's so funny because some of these.
That's a big short thing, right?
When is Blackstone report, Dan?
Next week on the 23rd.
Yeah, I think
you
asked- that's the
never
one
saw
I would
Vinny
like.
wearing a vest. I
No.
don't think, yeah?
I'll wear a vest from time to time, but not as a uniform.
Is it surprise? It doesn't surprise me. I'm going back to you, Vin. Newmont Mining, which recently made an all-time high, a stock that had underperformed the underlying market and the underlying commodity forever, finally on its horse. They report on Thursday of this week. I don't know, sure exactly who it was. They raised their price target to $180. Do earnings even matter, or is this now just a catch-up in the mining stocks that have underperformed forever?
This is hard for Porter and I, and this is like champagne problems. I mean, as value guys, you're not used to things working this well.
And it has worked
for
really
the right
well.
reasons.
Yeah, that's
right?
what makes us uncomfortable.
So, yeah, I mean, look, they could be down on ridiculous prints, and the earnings should be fantastic. And people are going to be raising numbers.
We're talking companies that no longer have debt. Right? Their net cash positions. They're just they're going to beat. They're going to guide higher. It's just questions how high the expectations, and who knows? Gold might just keep going up, and no one cares.
And Guy,
So,
Newmont, as we've said before, is the only S&P 500
Yep.
gold name. So if you're a manager in Boston, It's the one you can own, and you can keep up with the benchmark. So I think that's why you'll see continued up.
Does the market trade off of CPI? I know what you guys think of it, but like for instance, some of the most volatile days over the last few months since April have been around inflation prints. What do you think?
Well, when it's lower than expected based on them just fudging numbers, and then the Fed's going to cut. So I think it'll.
Well, all right. So let's say it's not fudged, it's hotter. What happens?
If inflation's hotter, the market trades off pretty badly. Right? My opinion.
I agree.
If it's
What happens to the FedWatch tool, the CME? Because like right now, it's basically saying like a near certainty by the end of the year we're at 3.75 on Fed funds.
it'll probably there'll be less cuts put in, but that will probably mean there'll be more cuts in 2026. Because look, to me, in order for Besson and Co. and Trump and Co. to get a good economy, rates have to come down. Housing has to work.
Right.
Has to work.
Because that was part of one of their stools is housing, and they kind of got a bit lucky with the AI capex that just kind of dragged the other part of the economy along with it. So that's the part that they need lower rates. They need lower rates for the economy, and they also need lower rates to finance themselves. Right.
Dennis DeBuscher, who was on the Tape podcast yesterday.
Great podcast.
Thank you. He had a great point. Very smart guy. He says housing can't work. If housing actually starts to work, you have a big problem. Because what's happening behind the scenes is that because not everyone is participating in the market, he's saying that would add to the inflation. The fact that housing is not working.
I like
is
Dennis. I
actually
disagree with him though.
helping, whatever. But I hear what Vinny's saying. But if that happens, if you told me right now the Fed's not cutting at the end of October, the S&P's at 5,000.
Yeah, but
they're cutting. So
lower rates is great for the consumer.
It
It's great
is,
for
but it's
people
not. The
like
affordability doesn't change enough at the margin. That's all.
But I think we have to think outside the box, or at least the way we're thinking. We're not long that much of any housing, so I'm not making a bias here.
Housing stuff.
Well, Rocket is kind of a
Rocket,
indirect.
but that's a lower rate. Yeah, and the stock has come
Mr.
in.
Cooper.
But in that regard, don't be surprised. Remember, about a month ago, Besson said that housing is in a national emergency, right? I can't get those words out of my head. There could be a lot of unconventional crap that we see coming out of the Trump administration.
And talk about the Fannie Freddie rumors that came out today.
What
The
was-
sovereign wealth fund is going to invest.
Like who's going to invest in the equity of Fannie and Freddie? Do we subsidize? I'm just throwing this out there. Don't know. Do we subsidize mortgage rates for first-time and second-time home buyers for everyone who has?
If they allowed people like me who refinanced at 3% to have a portable mortgage, is that something that could even happen?
It's too complicated for us. But like part of the thing is that they're ending QT. They've been running off mortgage bonds.
Yeah.
Right? And so they don't want it. They're like, you know what? Let's stop that. And lower these mortgage rates. And so they're going to try something. That's what I think. And I think it's coinciding with they've done a lot of work with the bankers of Fannie Mae to get this equity out the door to finally monetize this asset, which is 10 years too late. And so I think there's something coming.
We get into the nuts and bolts of earnings season, Dan. We have a CPI hopefully coming out. We also have a big week here at Risk Reversal Media. We have market call week. What else we got going on?
Yeah, I'm watching the On the Tape podcast on Wednesday. Danny, who do you got?
The great Jeff DeGraff from Ren Macro.
That's kind of old school stuff for you guys.
Yeah, you get
there
a free
little
hat
bit.
if you get a question. It's great.
Yeah, no. So we got the market call Monday through Thursday. We have Liz Thomas as usual.
Carter
We have
Braxton
Worth. He's probably in the DeGraff camp of
they're all-
technicians right
So
now.
Dan,
over
how
there.
about let me point this to
Yeah.
you. What's your single favorite idea right now?
I think we are. I don't really want to make anyone nervous here. I think what's going to happen when this bubble pops is going to make 2008, and I think it's going to make 2000. We're finally going to have a protracted bear market because I think that all of this investment, it's totally financial. It's found its way all over the system, unlike the .com did. Very similar probably to, I don't need to tell you guys about the financial crisis. By the way, are you guys great financial or global financial people?
I'm both, actually. I do.
So can you two finally be friends now?
Well, of
That you
course.
both agree that the market's going to crash?
No, listen, but I don't know why. Can I make one last anecdote? Okay,
Sure,
so
sure.
my parents are
Anecdote?
80. My parents are, is that an anecdote?
No, we have an inside joke. He does it all the time.
So my parents are 83 years old, okay? And they've just been long stocks. They probably have a 60-40 sort of thing. My in-laws, I do not see the risk reward for anyone who can't weather the storm over, let's say, 10, 20, 30 years to be as exposed to the broad market right now because you are exposed to this AI trade. And I think the AI trade is really dangerous. You can have a ball. There might be, NVIDIA might be at 300 by the next time we podcast or whatever. OpenAI might be the first $1 trillion private company, forget Aramco or something like that. I just think the higher they go, the harder they're going to fall. And I mean, to me, that's just so.
Remember the theme song to The Big Short, which is definitely on your playlist?
Yeah, when the levee breaks.
Yeah, that's what Dan's describing. So when the levee breaks, if that were
All right, can we go around the table? I hate the comparison. I think this is 5x of what could happen from the .com.
.com, not.
I don't think they'll let it fail. I think
How do
that
they not let
I
it
think
fail?
the-
How does it
I
not
think
fail?
I think the moral
Hazard?
moral hazard
Throw
went
that
out
out
the
the
window.
window.
Thank you. A long time ago.
Hubris.
They're going to print. They just print the money.
Gold.
And it's of national importance. And someone said this long time. Luke Roman said this long time. It's of national importance to keep the stock market up.
Luke
Right?
Roman coming back on the tape in a few weeks.
So you think in the next few years we're going to see rates at zero again? You think we're going to see massive QT?
If your wish happens,
I don't wish it.
I know. I'm just kidding. If your crash happens, rates will be zero.
How could
again.
it, Porter? How could it not happen?
It's a longer podcast for another time.
Yeah.
I will tell
Listen,
you this.
there's a way the way it can muddle along that says like, yeah, we slow the capex but AI is great and NVIDIA doesn't sell as many chips.
Let me explain how it
NVIDIA
doesn't
sales
happen. Let me tell you it doesn't
fall
happen.
50%. That's fine.
Debt's $38 trillion right now. $55 trillion. That's how it doesn't
All right, I
happen.
want to make
But
one
is
last
it-
point.
is
I know,
it-
guys. I know we got to go, but I want to say this. So think about these last three deals that we've seen: Intel Foundry, AMD high-end GPUs, and Oracle data center build. These companies have all missed almost every cycle of the last 20 years, and this is where we are right now. That all of these three companies have to execute to get to the other side of this sort of thing. They're all going to be the patsies. I'm just telling you.
Does
The
the world
NeoClouds.
end if NVIDIA's chip sales in 3 years are down 50%?
It doesn't end, but if we speed up the depreciation of all these chips and they don't have a next iteration and all these companies have to take marks, we've talked about marks. I mean, I think it could be a disaster
for like that handful of
Have you
companies.
guys seen
and
what-
I get that they're big,
Yeah.
but like,
Have you guys seen what the growth rates in these cloud businesses have been over the last few years? AWS, they got down to like 11 or 12%. If they didn't have this boom, this business that has funded this massive company for North American retail sales and all, it would really be in the shitter right now. I mean, so I just think about this as like there is another side of this. Nobody can see it. I was at a tech conference last week. Some of the smartest VCs and founders, nobody can see it ending.
I'd love to change the world, but I don't know what to do, so I'll leave it up to you. Folks, I'll leave it up to you to join us again on the Risk Reversal Podcast. By the way, that was a great 10 years after. We'll see you later, folks.